Strategic. Yeah, I'll start from notes on YouTube videos. Whatever taxes given or rate.
We did one accounting course before. Okay. So if you go to the UB library and look up the most basic accounting book, YouTube videos are good, okay? But you need a book that you can keep flipping back and forth, right? The more you use your hands, right? The more you write notes, the more you do that, the more you remember, because that's how our brains and our bodies work. It's not, oh, I can just see it and that's it. You remember it for a couple of minutes and maybe even a couple of weeks later. But when you write stuff down, and you use your hand, so forth, it's called muscle memory. That's why you see people, basketball players, who take thousands of jump shots. So when they get the ball, it's automatic. Their body don't even think about it. So when you are writing notes and stuff, your brain is looking at that because it's going at the speed at which your hand is going. That's what happens. So you have to put the time in. But the time is not, I just study for 1 hour. You need to study half a day. But it's not continuous. It's that your mind is always on that. You understand what I mean? You know? You don't, it's not like I got the book here like that. No, you have a book. This is how I study. Right? I have my textbook, I have my notes here, I have a pen, right? I'm going through, I'm reading, I'm making a note. I used to highlight it and then I realized I was just being lazy. So I take it, therefore, so forth. If I wasn't something I didn't understand, right? Usually it's a definition. I gotta go look up that definition in the textbook. Okay? If you're using something, like if I say to you, syndicated loan, and you don't know what a syndicated loan is, right? When you study, you don't say syndicated loan, you say, I don't know what that is. I need to find that out. And it'll be somewhere in your textbook. Whereas if you looking at YouTube, unless they tell you what a syndicated loan is, they're just going to use the loan and keep going on whatever. Okay. It's wrong. It is difficult. You come home from work, you're tired, your children running around, your mother carrying on, your father making noise, the dog barking. Right? You had a hard day. You had an easy day. Right? Okay. And then somebody comes and just messes your day, it's the home and just come. They do that test. And that test was hard. And it was on stuff I ain't studied. That's it. That's all else going to that very last one. Now the rest of them short out. Course.
You took calculus, yeah? Awesome.
I like statistics from UB. I got an A in that. I really enjoyed that.
Everybody said that, like, people think it's hard, but when you take it, you know.
So I know that I really feel like I think the lecturer really made it really well. I mean, and she's a young, I think she's like younger than us. Diana. Mr. Monty, you know Miss Adley from UVA.
Sadly,
Yeah, she did statistics, but she was a student now. Cheyenne Adley.
you may know her.
She younger than us, but I don't know what she's there. But she said she was from Leah, UV. Leave the country, and she said she wanted to go like maybe do like something in Dubai. Did she have a couple degrees? But she kind of like teaching statistics, so she came in and never heard. So she made the class like everything from it. I don't know why I can't pass the notes because the statistics I got an A in for 163, which was
Statistics is very different from accounting.
which was like finance math. I got an A in that, but I just my brain was still okay. I can't pass it. But I passed the business.
I like calculus.
Where? Here or at UB?
Oh, yeah.
Oh, you, and you're doing all three of them at the same time?
No, that's what happened. So after
You cry every night. You'll cry. If you try to do the tree down again, you'll cry.
Oh, no, I would never lose. No. No.
I think, I don't know what I have to do. I need to figure it out. That's why I say like I gotta tell them. What other thing is I gotta do?
But all Mr. Copper, there was some management, some vision like that. And then it was multinational money in capital market. You weren't money in capital market.
Sorry?
You weren't, no.
I'm done, but I don't.
Yeah, and there was something else you didn't.
Okay.
Yeah.
I don't think my house is available.
Oh, yeah. Oh, 'cause I did like 3 and I was like,
What?
yeah.
Let me go look on.
I think I have to find the list, but I think I did money in capital market for them. 3, I think I did it. I was like, oh my God.
3? I don't really see.
Yeah, then I asked Mr. Pumpkin, and I was like,
I know it's on me on this.
listen, I just had a class with him, but he had every class exactly like that with Google, and he used to give us all those essay questions and then those, what was it, 100 and, what is 100? What was it?
Let me see. Oh, that's the wrong thing. What program we doing? The whole thing.
The Google.
So. Which one you say you look?
We did financial institutions.
Okay.
Financial services.
So money and capital is Mr. Carnival. Risk management, I already take. That was
Yeah,
Ms. Smith.
yeah.
Mhm. Introduction of finance, I think that was with Dino.
Oh, I didn't like it.
Ethics and professionalism, I go with inspiration. I know, I do like it twice.
Yeah.
Would be. So management of financial institutions. No, we haven't said all the points. I haven't said all the points.
Yeah, I said, okay, so
So
that,
he take that, that was him too.
that I'm money in capital market.
Yeah.
Okay. I thought we had 3 on, I don't know
No, I have to
why.
take microeconomics.
He doesn't know what to do, but I say, you know what? That's Mr. What's his name? What's that like? What's his name?
Not really.
No, I have his name. I took him, he would be, I had him last time.
Well, just admit I'm your favorite actor.
Listen, I always tell people I thought Mr. Carbo was something until I met you. Then I was like, okay. I know.
We just don't see why all the big complain. Okay, we're gonna wait a couple more minutes to see if Colette's coming on the meeting. You all haven't heard anything from either of them, have you?
No, no, that's.
I know that, no.
Yeah.
It's holiday tomorrow, you know,
Yeah.
that's just coming. But I said, anyway, let me just try. Well, because I feel last week I come to. That's it. I wasn't coming on no online on that. So we just ruined. But I say anyway.
You will take, you have paid your money to go to these courses, and because the
One
balls are online.
class?
One class?
Just one class?
You know, in my entire MBA, right, 2 years, I don't think I willfully missed class. I say I just ended. Right? I've never missed a willfully that. Now, if I wasn't feeling well, or if I was late or something like that, but to say on Monday I ain't going to class on Wednesday, right? I pay too much money for that. Okay. And especially if there's a test, no.
I tell you, it wasn't a good class for me, because it wasn't good.
Like I said, if there's a test, you could choose to do what you want.
I got because I want pass this class.
Yeah.
So I.
That's a reasonable thing to do, don't you think?
Yeah, I know, man, don't worry, holiday tomorrow. Can't go no place today, but at least I have, getting my education, and my friends are very, ready to tell me go to class.
Oh, I keep on looking at this list of times because I know, I don't think after. I was at uni and then I was in uni. I don't like uni.
That was already too much for me. Every time I see someone graduate, I say, wow, who else can I tell something I couldn't do?
I don't
I'm really
under, what was so
close to them.
difficult about UB? I'm curious, I'm serious, I'm curious.
I just don't like it.
No, but what didn't you like?
The registration really turned me off.
Yeah, the whole
The
process.
fact that I think that maybe if I wasn't right here in life with so much responsibility at this point, if I was still younger, I would say that I thought would be I go stand up outside all day, looking for one lecture, they send their secretary say, oh, they'll come in tomorrow morning. Like I already take time off from work now. I only go out for my lunch hour because wait so long, it's the person say, hey, let me continue to wait this long way, they'll come back here, then they don't show at all. Then you have to spend 2 hours off from your job, go back to that was really, I just was too frustrated. So that's why I say kudos to everybody to do it. Thank you.
I just feel like.
That's the, I don't want you to take this as the wrong way, right? But until you could express that, yeah, whatever it is, however you express it, write it, talk it, act it out, whatever, paint it, until you could express that, right? No, it's but Dominic, that is it makes it works against you, not me, not the person who's hearing it. You follow what I'm saying? Okay, because you're putting yourself in a position where the other person is saying, boy, what's this, what's that? They starting to question everything now, right? Whereas if you say, I didn't like it, right, because of the registration, I didn't like it because the classes were too many people, the hours when they had the classes and so forth like that, and so forth. But if you don't express it, honestly, right, it really works against you. Okay, you just imagine you're gonna go to a seminar with Commonwealth Bank, and you got to speak for 10 minutes about credit cards to managers, and you can't express yourself. I mean, I know that's a far-fetched scenario and that it's exaggerated, you understand? But if you can't do that, you could appreciate how difficult it's going to be for you. All right. I don't know how I can do this. I hate when people don't show up.
I don't mind not showing up, at least they're gonna show up, so people are already start 10 minutes ago. Like if I wasn't not sure, I was gonna say, oh, Mr. President, unfortunately, I won't be able to make it tonight. But I'm here.
Why can't this go to the screen show? Okay. Yeah. I was upset because I couldn't see you,
What?
Yeah. I'm walking around here with Andy. We're gonna start this lecture because I really want to be finished with our lecture on Tuesday. Sorry, what was that? No, we can put in the desk.
You can take it online on Tuesday. It's about that. Maybe I'll start seeing the Lord Tuesday.
Yeah, I know I can do all of that. That's not what I want to do.
I don't know, friend, I sent it to you online.
I have it. Okay. So first, this is can you see? Or you all want the light
Turn
on?
off the light, please.
Backlight is on, right? Hit that light switch there. Okay. All right, so let's start. So this is a quote from the managing director, Chase Bank, umpteen years ago. Okay. And if you are a banker or if you work in the financial services industry, I don't care where you work, you must understand this, right? A banker's job is to manage risk, not avoid it. There is going to be risk with everything the bank does, right, Annalie? Right? Ms. Smithfield? Right? Okay, right, Dominic? Okay, they may not pay you back. The depositors may take the money out. So what you have to do as a banker is always manage the risk. You must manage the risk, okay? And that is why I like that quote. And if you all learn anything from me, understand that. Manage the risk, okay? Some risks you manage by saying, no, we can't take that on. Other risks you say, yes, if we do this and that, okay? Okay. We talked about de-risking before, all right? Okay. And this is not what? Managing your risk. They just walk away from it, okay? The phenomenon of financial institutions terminating and or restricting business relationships with clients or categories of clients to avoid rather than manage risk with the FTA-based risk approach. Okay, everybody good? Now we're not going to go into de-risking here. The point is, this is someone else's way. This is in this is directly, right, in opposition to the first slide. Completely in opposition to the first slide. Okay. 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 So we're just going to go over this quickly. The Financial Action Task Force risk-based approach requires the countries, competent authorities, and banks identify, assess, and understand the money laundering and terrorist financing risk to which they are exposed, and take the appropriate mitigation steps in accordance with the level of risk. Now, most of us can say, well, that's great. Let them guys in them suit, getting them big salaries, deal with this. However, you should have seen in your various institutions where this stuff is getting pushed down to your.
I can eat this. You mind?
Oh, I don't mind.
Okay.
You know, they might mind, but I don't mind. Okay. Correspondent banking risk. De-risking has led to severe curtailment of correspondent banking facilities in some jurisdictions, okay, around the world, mainly the Caribbean, Pacific, and Africa. You all notice that? They're all the peoples that is, people that look like us. Okay? In response, many of the international agencies, such as the World Bank, the IMF, Commonwealth Secretary, and Financial Action Task Force have been actively engaged in assessing the scale of de-risking, the impact on the industry, and examining options or alternatives to mitigate the negative fallout. Okay, now, why did I put this in here? Let me make sure. Okay, right. So why did I put these slides in here about de-risking? Remember when we talked about de-risking? We talked about how easy it is, right? That the US could put the law in place that impacted the US banks, and the US banks would then have to turn around and put pressure on everybody else, right? It's here, okay? Not Europe. See? So the banks that feel it are Fidelity and Commonwealth, because it costs you a lot of money as a bank, right, to put in the systems that will allow you, right, to meet this correspondent banking risk. Okay? You understand? So, this is chapter 11, right? We're talking about credit risk, okay? The risk due to default or failure by a borrower or counterparty to fulfill its contractual obligation. Okay. The bank's exposure to adverse changes in the value of financial instruments caused by a change in market prices or rates, including interest rates, exchange rates, security prices, and commodities prices. What are we talking about? This is one type of risk. We all understand that. Credit risk. Right? The people ain't gonna lend us back, right? Give us back the money that we lend them. Credit risk. Okay? Okay? Credit risk. For Angelique, when she lends US dollars to another bank in the Bahamas, the risk that they may not pay her back. We call it a different thing if it's foreign exchange, but it's the same thing, right? The risk that they will not pay you back, okay? Or fulfill its contractual obligations, yeah? You know, the person, when you go take your car to the mechanic under the almond, the backyard mechanic, you know, the almond tree mechanic, you take your car in, the bush mechanic, that's the expression, thank you. You take your car to the bush mechanic, don't worry, we got this way, we can cover it and so forth. You come back the next day. Well, you know, we needed the part, we couldn't find it. Then you come back the next day. And 3 days later, you still ain't get your car back. Did he fulfill its contractual obligation, even though it was a verbal one, right? He didn't. That's the risk that you take. In a bank, we call it credit risk. Now, you need to understand this in the sense that, yes, we know it's there. How do we mitigate it? Okay, that's credit assessment, right? That's why stuff just go to Franklin, Thomas, and to Sylvia Cooper, right? For them to assess the credit, okay? All right. The next risk that we have is market risk, okay? The bank's exposure to adverse changes in the value of financial instruments. In other words, if you have been invested in any type of security, there is a chance that that security's value will fall, okay? Now, of course, all y'all got a big portfolio of stock, right? Right, Angelique?
Yeah. A big portfolio of stock?
Okay, what's in your stock? What's in your portfolio?
T-bills.
No, your portfolio.
Oh, my portfolio.
Yeah, your portfolio.
Oh, I thought you was being the bank.
No, your portfolio. Okay, in the bank, yes, the bank has T-bills, government registered stock, okay? That's a security. Does the value of that security change? Now, in the Bahamas, it doesn't change very much at all. But if you were in the United States, Canada, Mexico, Europe, then that's going to change because things happen and people will respond to that. The rate of inflation goes up, they're going to change the demand for the government T-bills, and they're going to want a higher rate of interest, okay? So the bank's exposure to adverse changes in the value of financial instruments caused by a change in market prices, right, or rates. Remember, market prices. Is LIBOR a market rate or fixed imposed rate? LIBOR, US dollar LIBOR, is that a market rate?
Market rate.
It's a market rate. So if it's a market rate, does that mean it could change?
Yeah.
Yes. Okay. So if you have a market-based loan, i.e. a LIBOR-based loan, okay, could you be taking market risk? Angelique, don't say nothing else, okay? Could you be taking market risk?
Yes.
Okay, because you have priced your loan here. Yeah. You see? Okay. That's why the definitions are so important. Okay. Including interest rates. Okay. Exchange rates. Yeah. Okay. Securities prices and commodities prices. Most people think when we say market risk, we're thinking about this. No, it's everything. Any type of financial instrument, any kind of financial instrument. Okay. And as a banker, you need to understand that this LIBOR, okay, is going to affect you, right? Interest rates are going to affect you, okay? Exchange rates are going to affect you, yeah? Okay. Okay. The next risk we have is what we call liquidity risk. Cameras out, click, click. You know, I can miss you all. I don't like them online sessions. It's much better to see you all smiling. Take your camera off. Liquidity risk. The risk that sufficient cash flows will not be available to meet the bank's financial commitments at some point in time. Now, Dominic, is your chance to be a star.
Yes.
Explain to me what liquidity risk is.
Basically, shortage of cash flow.
Okay. So what? So what if there's a shortage of cash flow?
You'll be unable to pay out your deposit clients, so like, it's when the bank doesn't have enough money to pay out deposit.
The risk that's sufficient, Dominic, it's your night tonight. I know you're sitting down in the back there, right? All I can see is you're giving me them eyes saying, why am I being picked on? That sufficient cash flow will not be available. Why can't the bank make sure that it has sufficient cash flow? Come on. And it says the risk that sufficient cash flow will not be available. The bank always have money, right? So how could they be a risk that the cash flow isn't going to be there? I'm giving you a chance to enjoy your salad, then I can pick on you. Go ahead, anyone.
So they just overland and get lend, they lend out the funds, and they don't keep the school, and they don't fund. Is that?
If you have a budget, okay, of $1,000 a month, and you spend $1,200, where is $200 coming from?
They don't have it, so they, that's what they
Well, how
overland.
do you spend it if you didn't have it?
You need to rent some stuff.
Maybe. Isn't that exactly what we're talking about? See, you think of a salary as coming back the next month, right? But think of it like this. You have a budget of $1,000 every month, right? And 1 month, right, you spend stuff of $1,500. Where did the other 500 come from? Now, if you knew it was coming, you could do something, couldn't you? Everybody here? Dominic? If you knew that you were going to have that, like, I know I go into Miami and I can put a lot of stuff on my credit card. So this weekend coming up, let me try to hold off and put this aside and so forth. So when the bill come in, I will be ready, right? Okay. So in other words, right, the bank has this risk that it must make sure it has funds for contingency, right? And it has funds sufficient to meet the amount of loans that it is making because you're paying the money out, right? It has funds sufficient to meet depositors' requirements for cash. Okay, even though that don't change too much, but it's still got to be there, right? This weekend come, how much cash you'll pay out? They ain't pay out that much because everybody got debit card, credit card.
You gotta make sure the ATM full.
Same thing. Okay, every ATM for Scotiabank better be full by tonight. If not, somebody can get real pissed off in Scotiabank, right?
I didn't know.
It was great to be a manager, you know. He had treasury officer used to come, Mr. Fountain, you know, the weekend coming up, the long weekend coming up. We gotta fill up the thing, but we ain't got enough cash to fill it up. Well, okay. So what do you mean you ain't got enough cash? I said, well, we got cash, but we don't have the bill, the number, you know, the bills that you need. Now, understand this. If they tell me that as a manager on Thursday and the weekend start Friday, right? Friday, Saturday, Sunday, they didn't do their job.
No.
That's obvious. But see here, sufficient cash flow. You didn't make preparations. Now, if you tell me that Monday, we could get sufficient cash here in the bold and the denominations that you need to meet that. Now, that's another example of what I'm trying to drive at in terms of this liquidity, right? It's not just that, oh, I got $1 million sitting in the vault, but they're all $100 bills. That ain't gonna wake in the ATM. right? You need tens, 20s, 50s, and hundreds. You don't put fives and ones in, right?
You know, most ATMs don't even put tens.
Yeah.
I think only First
Right,
Caribbean
and then-
and Commonwealth.
Yeah, First Caribbean puts tens.
And
Okay.
Commonwealth.
Okay, and then they tell you, of when they first started doing, they used to put as much as you want, but you couldn't get like $601. You could get 610, but you couldn't get 605, right? Because they just didn't give you those denominations. Okay, so my point here is this is a bigger risk than it first appears, because people think that a bank just has money sitting there and available. Okay, right? You have to plan. You have to make sure that you have the funds available. You have to be sure when money is coming in. You have to be prepared for the contingencies. This is a big problem. My friend at Scotiabank, right? Okay. Somebody borrows from her, Scotia, one of the other banks, borrows US dollars from her. Okay, not US dollars. They want cash, right? They want cash. They ordered the cash and so forth. No problem. Okay. And this is an exaggerated example, but the point is here that if I'm Bank of the Bahamas and I'm having a liquidity shortfall, the first people I'm going to turn to are the other banks. Okay. And the first thing those banks are going to do is they're going to say, hold on, let me make sure I can do what, Angelique?
Right.
No, cover myself first, right? So I don't have a problem whereby, right, Bank of the Bahamas problems are spreading to me. Okay? And if they think that that risk is too great, they'll tell Bank of the Bahamas, sorry, but I can't let you down. Okay? All right. What is this? Okay, interest rate risk. And while you all sitting here, you ain't paying much attention, taking your camera time, ladies. Interest rate risk, okay? The risk that earnings and returns will fluctuate in line with changes in interest rate, okay? Interest rate risk. The risk that earnings and returns will fluctuate in line with interest rates. That makes sense to you, Dominic? Dominic? That makes sense to you? You sure I just put that up there, right, so to try to trick you?
Fluctuate in line, changes in interest rate. And so you have the proper amount coming in and going out, and the same with the bottom.
This part. Interest rates go up and down?
Yeah.
So if interest rates go up and down, how will that affect this if you're a bank? You have to go back to your fundamentals. How does a bank make money? Takes the depositor's money. Bank is always in the middle. Takes the depositor's money and lends it out. Okay, and it earns a spread or a margin. If this goes up too high, then this got to go up corresponding. If this goes up too high, doesn't mean you would raise what? Loan rates that high either, right? Okay, yeah. If these go down, right, and these are also down, but you can't lend it because you have too much. Nobody wants to borrow like it is in the Bahamas right now, right? We can't lend the money. Ask my friend from Treasury. They got tons of money in the bank. They can't lend it out, especially Scotia. Scotia's just giving you a hard time every day. Okay, so the risk that earnings and returns will fluctuate with changes in interest rates. Now, you need to understand that. So make sure you read it in the book. Operational risk. Now, you should be able to tell me that, Dominic. What's the operational risk? Don't worry, I got to pick on her soon. She finished with a lunch. Oh, you gonna answer that?
Yeah.
All right, so you can say it.
Okay, so operational risk is anything to do with risking operations, and that could be day-to-day activities, files, um, email communication, what else does content not mean? Let me read this.
Okay. So break
Fraud,
down and
fraud.
start. Information. The information that you're coming in is fraudulent because your email system has been hacked.
Okay, so that covers everything.
Communications,
Mhm.
right? The reports that you're getting have been adjusted because somebody committed fraud, right? Transaction processing. You're in credit cards, right? Or your cashiers are not balancing, but you're still processing everything through. Okay? Settlement systems, right? The credit card systems break down, you know, all the interchange, all of them little things, okay? Procedures, okay? Fraud by employees. This is the big one, okay? This is the big one. Nowadays, it's hackers from the outside, but most banks lose money through internal fraud, okay? Outsiders of unauthorized transactions by employees, especially wire transfers, okay? Operational risk, okay? The potential losses due to a breakdown. You know, 50 years ago or 25, 30 years ago, nobody was concerned about this other than the cashiers, you know, on Treasury. There were rules there, but nobody paid as much attention to it as they do now. Okay, operational risk. Okay, cross-border risk. Scotia, Turks and Caicos report to Scotia and Nassau.
Not Turks and Caicos, Trinidad. Trinidad.
Report, no. Turks and Caicos reports to Trinidad and Tobago.
No, Trinidad and Tobago reports that.
Okay. Dominic, camera time. I gotta stop telling you this. I can just slip and spit past the slide. I had a good mood tonight. They must see the long weekend coming up. You only got one more week. Final exam is on the 17th.
What? What kind of thing this is?
Yeah. You only got one more week.
So we have no classes next week then?
You have a class next week? Next week is what?
The 7th, the 8th?
That's right. And the exam is the 17th. Thursday.
Okay, so we have an exam, we have a class on the 8th and then we don't have no class on the 10th.
We have a class. I'm gonna try and only have a class on Tuesday and a class on the 8th, right? It would be a revision if you want. That's what I gotta try and do. That's why.
Hold on, the 8th is Tuesday?
The 8th is Tuesday, then it's Wednesday. When is Thursday? What is Thursday?
Thursday is the 10th.
Right. And so the 17th is a week from that Thursday. That's when you have to test. The last class is the 10th. Before I had this the 17th. Okay, but there's only a 6 weeks, there's only a 7-week session. Okay, we started the last week of August, not August, April, the 27th of April. Okay,
Okay,
all right.
so you're doing a review on Thursday, you saying?
I can, yes. So I gotta get through this. Okay. So potential losses arising from the bank's operations in foreign jurisdictions. Okay, so Trinidad and Tobago are reporting to you all their operations, okay? Their lending and so forth. Anytime you do anything with them in US dollars or anything like that, cross-border, because you're in two different countries, okay? Yeah. This can stem from loans outstanding or investment made in foreign location. Simple and straightforward. You're making a loan in US dollars down in Trinidad, okay? From Scotiabank in the Bahamas. Okay. This is always a difficult thing because there's no context. Okay. Now, so those are the risks that we have identified, right? And since we are bankers, our job is to mitigate risk. And since we're going to mitigate risk, on page 300 of your text, which I'm not going to go to, right? We talk about how we can do that. You can do screening, monitoring, long-term customer relationships, loan commitments, collateral, compensating balances. So we're going to take our time and go through each one of them. Screening. What are you doing here? Since it's only the two of y'all, it's your time.
I guess looking over everything to make sure it's in order. No?
How's the sieve work? You have a sieve sound?
Yeah.
You have a sieve
Not
flour?
so- Yeah, so taking out the big ones, I don't know.
What does it do? Some things can't pass through the sieve.
Yeah.
sieve.
Mhm.
So whatever left is what you don't want,
Okay.
okay? So if you're screening, you're sieving. You understand, Dominic? Okay? The people who you don't want don't get past the first contact.
Okay.
So if I walk into Commonwealth Bank and I say, I want to borrow 300,000 US dollars for a house in Miami. The person in Commonwealth Bank says, I'm so sorry, right? Commonwealth Bank doesn't lend money for US dollars back in US dollars to Bahamians to invest in. Follow me? That's obvious, okay? So you just screen that person, okay? Somebody comes in, they want to borrow money for a car, okay? They're 70 years old, right? And they want to borrow money for a car and they need 7 years to pay it off. You don't know any of this until they fill in the application. When the application is, they look at the application, before you do anything, you say, I'm so sorry. We can't lend you money because you're 70 years old. And you'll be 77 when it's finished. What are you doing? You're screening, okay? Someone comes in and says, I want to borrow money from you. Sorry, yeah, I want to borrow money from you, okay? And I want to borrow it on cash secured. You say, okay, we can do that. What you gonna use the money for? I going to start a marijuana field in the back of my cousin's place in Long Island. That's against the law, eh? No. You see? Now it seems silly, but you're doing this every day in a bank. Okay? It's only the ones that get through the sieve that you start to put more time and effort into. Monitoring, what's that, Dominic?
I guess they want. This is after, this be after they are in God's screen, so that they're a customer now, right? So that's a day when they will watch their transactions and their home.
What's this?
Technical credit time,
So what are you doing here?
monitoring the way they pay back, I guess, the way they.
You ain't getting credit cards, right? Okay. I thought you were falling on credit cards real good.
So what you mean, like monitoring the usage and the way they.
Because if
when
they
to
go
block.
over limit, what the hell?
Yeah.
To know when to block,
When to block the card. So you can't do that. You don't just give somebody a $1,500 or $3,000 limit, walk away, and they come back with a bill that's $5,000. Now you have it built into your systems. The computer systems do that for you, and so forth. The theory, can you hear me okay?
Yes, sir.
Okay. All right. So monitoring, yeah? What are we doing? We are looking at how the loan is being conducted, okay? How the customer is repaying you, right? Are their payments on time? Monitoring, okay? It's just like you look at your cashiers, right? You don't look at them every minute, but at the beginning of the day and the end of the day, right? You're checking to see that they are set up properly, right? And so forth, and that they are monitoring during the day. You may check to see if they keep posting all their transactions.
I'll keep it within their limits.
Or within their limits. So you're monitoring, okay? Long-term customer relationships. Something the Scotiabank is not very good at.
Yeah, man.
Long-term, I've been a customer of Scotiabank for a long, long time.
See,
Right?
you're definitely good at that.
Cash Fountain was a customer of Scotiabank since my father started the firm with Gerald Cash. Ain't no more. I'll tell them they gotta go. Right? They're going to Commonwealth. Long-term customer relationships. The better you know your customer, the easier it is to lend them the money, right? Because you understand the business that they're in. Lend me $100,000, Dominic. Lend me $100,000, Angelique. What the hell? First of all, I ain't got it, and if I get it, why I gonna let it to you? How much you gonna pay me back?
Somebody give me.
So, well, the only people who can give you that is Sebastian and Flowers. So, long-term relationships help you, right, to have a stable customer base and to understand their business. The more you understand the business, the easier it is for you to lend it, okay? Or the easier it is for you to provide the service that they're looking for. Loan commitments. What's a loan commitment?
You sign it and contract and
When you what?
sign on to make a commitment to payment from, it has something to do with, no,
You didn't say no.
say no one commitment.
Loan commitments. What's a loan commitment, Natalie?
When you agree to the terms of the loan.
You agree, what you're saying is exactly what she's saying, when you agree to the terms of the loan, but there's something else from when you're doing credit risk. Loan commitments, right, refers to the amount that you have committed to. So you've signed the loan, great. How much money I got out there? You haven't drawn it down, but I gotta be prepared to lend the money to you, right? In other words, it's the same thing, that ATM gotta be full. Right? The ATM is not going to be full if I don't know that Friday is a holiday. So I know Friday is a holiday, right? And I prepare for that. I know I have 10, 15, 30 loans, right? That are going to be drawn down within the next week. So I make sure that I have money to do that. Okay? So that's how I manage my credit risk, the loan commitments, collateral. Okay? So let's Whitfield. You thought? Okay. What's collateral when we're talking about credit risk management?
Collateral is what the bank holds. It's an asset usually that the bank holds, so like a house, your car, even like a safe CD.
Why would the bank hold the collateral?
In the event that you
No.
don't pay, so credit risk that you're unable to fulfill whatever the agreed terms were.
Okay, sounds good. So if we have real estate as collateral, that's good enough. What else do we need? Do we need to do anything with that? We could just use a handshake. What do we do?
But you want the process?
Tell me, anything you want. It says collateral. Techniques of credit risk management, collateral.
Then the bank will use the power of sale and sell the property because it's in the terms you agreed to and, you know, I guess the offer, letter or whatever. So,
Okay.
wrong way?
I didn't say it's wrong. I said, okay.
Yeah,
What'd you
so-
think, Ms. Cartwright?
Yeah, we're gonna.
You just saying that right, so you're brushing me off. Would you say, Dominic? Wait till I can be a bit class. All y'all just brushing me off. Okay,
Not me.
okay,
You know,
thank
you
you.
always ask me, and I always ask.
Thank you so much. I'm glad to hear that. Okay, collateral. It's not just that you hold the security. It's that you legally have a charge that you can enforce over the security. Right? You could give me your land papers. That don't mean I have the right to take your house. I have to, what? Take a mortgage. The mortgage has to be registered. Okay? The mortgage has to be registered. If it isn't registered, right? I got problems, right?
Yep.
It has to be stamped and recorded. That's the process of a thing. If we take a collateral out of, if we take a, what we call a chattel mortgage out over your car, right? We gotta hold that to ensure that we get the car if you don't make your payments. Do you understand? So it's not enough to just say, oh, collateral. You have to understand what the collateral is. What's the best form of security you can have? Dominic? The best form of security that you can have.
Cash.
Collateral. Thank you. I can get you there. I can ask you from now on. Okay, Letheria, cash. Cash, why?
No, don't ask me.
Oh, you brushing me off like them three as well. Okay.
I don't know sure.
Compensating balances. What's compensating balances? Letheria, what's compensating balances?
Oh, yeah, I know.
Compensating balances.
That has to do with like the accounting and the bookkeeping.
No, sorry, not no Letheric. What you saying?
I know something to do with, what you owe. I don't know who you owe the funds to.
Compensating balances in lieu of, right, a charge, put extra money in the bank. Okay, in lieu, in a way of reducing my interest rate, make a larger deposit. Compensating balances. I can put money there, right, that is held in the bank so that you don't charge me fees or the same level of fees. Okay, because you can make more off of the balances than you would make off of the fees. Okay, that's the traditional way of looking at it. But in credit, if you hold compensating balances, it reduces the level of your exposure. If I owe somebody $1 million, but they got a fixed term deposit of $500,000, right? How much it? Sorry. If the bank has loaned somebody $1 million, right, and they have a fixed term deposit for $500,000, what's my exposure? 500,000. And if it went up to 700,000, my exposure would drop to 300,000. Yeah. So I can use compensating balances to reduce the risk associated with that loan. Okay. Everybody good? Okay. The next thing we can do when we look at credit risk management, we can use the 3 C's of credit. As we usually say, the 5 C's of credit or the Compari or anything. I just use the 3 C's just to give you the idea. Character, long-term customer relationships. That tells you about a person's character, right? Okay. Okay, sorry. Capital, how much money they can put in, what they get to lose, right? Right? Because you ain't gonna lend me that $10, right? So, right?
I'm not someone from.
Okay, 100. Okay, 1,000.
No, not.
That ain't happening. That ain't happening. Okay, so the 3 C's of credit. Character of the person who is borrowing the money. Capital, what are they putting into it? How much are they putting into it? How is it going to come into that? Is it going to be cash? Is it going to be in the form of additional security? Is it going to be in the form of your husband? You send your husband off and you can hold him a security for the house? However, capacity, the ability to repay, the ability to manage. Capacity, do they have the capacity to manage the business? Do they have the capacity to manage their financial affairs? Y'all look at me strange. How many people you all know can't handle their personal finances? Wait a minute, not all of us, because I ain't in that, okay? Okay? I done tell you all before, I do not pay Scotiabank any interest on my credit card loan. None on my credit card, none. And I'd be so proud when I walk in there and tell them that. Why you pay them interest? You just get paid, you just get staff right there.
I have stopped interest rate, but I did it because I take it God full.
I pay my card off.
Own is 9%.
That's staff.
Yeah, stop.
My own is 18.
Yeah.
Capacity, okay? The ability to repay, the ability to manage your financial affairs, okay? But notice this one is always usually at the beginning. You don't lend the people of bad character. So don't lend the Rodney McGuff, right?
Who say he got bad character?
I say he got bad character.
How? How so?
How so? Anybody who's jump up there and say picky head Montabi and all them funny things and so forth.
I mean, he got bad character.
That's what you say. I'm making the decision. I say he got bad character. Okay. Another way we have is what we call compare. This is a little more detailed, right? Character, right? Amount, margin, purpose, ability, right? Repayment, insurance or security.
I'm gonna break that down.
Let me try and break that down. I got that in my head. I had to use that every day when I was waking up Barclays Bank. Okay? This is a Barclays Bank thing. The 3 C's of credit, the 5 C's of credit, they're all the same. Just things to help you remember what's important. The reason I like this is because character comes first. The amount. People come and say they want to borrow money and they have no way how it don't make sense. Okay? If someone walks in and says they want to borrow money to buy a Mercedes Benz and they're working as a cashier at Bank of Nova Scotia and they've only been there for 6 months, chances are you can say, really, this amount is just way out of your league. Maybe you could buy it in a couple of years, but right now you ain't getting no money from the bank. The amount is wrong. The margin, what's in it for the bank, right? What is it? Are you being compensated for the risk that you're taking as the bank? Right? Purpose, my favorite one, right? Like the guy come to me and say, he want me to lend him the money to construct the condominiums, right? And he only gonna pay me interest until he sell the condominium. And I say, okay, and how are you gonna pay me? He said, well, what you're gonna do is he's gonna take the interest and roll it into the principal. So when he sell the condominium, I will get my principal and interest back. That's a good deal, Dominic?
Right.
Well, let's try it again, Dominic. Is this a good deal? The customer wants to borrow $500,000 to build a condominium, okay? He's gonna repay, he says, during construction, he only wants to pay interest. So I say, okay, you wanna pay interest. So, right? How, then he says, I'm gonna pay you the interest by adding the interest to the principal, okay? And then at the end of the construction, when I sell it, you'll get your principal and interest back. Is that a good deal for me as the banker?
No.
I mean,
The theory is that a good deal? You see you indecisive. The theory is that a good deal for the banker?
I think so.
You sure you from Long Island? Okay,
Yeah, well,
Ms. Roberts, is that a good deal for the banker? Ms. Roberts?
No, because he said he's not gonna pay you the interest, not principal until he sell the condo, right?
Mhm.
So that's still on either way for the getting taxation.
But on paper, I get my interest.
Yeah, but you won't be like the interest until who knows how long the contract stretch.
Correct. It's a bad deal, right? One, he's not paying me cash for my interest. So my interest could be out for 3 months, 6 months. If someone don't pay the interest on a loan for 90 days, isn't the loan in default? So I got problems internally now. That can't work. Second, right? How long for the construction to take place? Let's say he could do the construction in 90 days. This is the Bahamas. Ain't no way you're taking 90 days. Ain't no way you're taking 90 days. Okay? Let's assume that he finishes in 90 days. Doesn't mean he's gonna sell it in 90 days either, right?
No, and it doesn't mean that he's gonna get what he wants for it in 90 days.
So who's taking all the risk?
You.
Me, the bank. We have to mitigate risk. We're not running away from it. We have to mitigate risk. So my response to this gentleman was, that's okay, we'll pass. Okay? That's not a good deal for me. And then he comes back a couple of days later and he says, okay, you can pay the interest during the thing. I say, fine. Okay, how much of a down payment? How are you going to repay the principal, right? Because he's paying interest all along when the condominium is finished. So he says, when I sell it, and I say, well, how long will it take you to sell it? Well, however long it takes. Is that a good deal? No. Right? No, I need to know he has a buyer for that condominium, right? If not, we can turn that loan into a 7-year or 10-year mortgage, right? Or, right, he comes to me and says, the people at J.S. Johnson gonna, right, issue a mortgage, are going to take me out and pay off my loan. Okay, right? It's just common sense. Okay? You do not take these kinds of risks just so. So all of this is to help you understand the types of risks that you're associating with credit and how you can mitigate them. Okay? All right. Credit losses are a part of banking. The trick is an acceptable level of credit losses along with aggressive business development. This is a Commonwealth Bank special. This is a Commonwealth Bank special. I got to sit down with this. Why is this a Commonwealth Bank special? Because, right, they lend unsecured. So they're taking an acceptable, to them, an acceptable level of credit risk. Credit risk is the risk of what? Go ahead, Anthony. Credit risk is the kind that has. You don't need to look at the slide. Turn that thing down. Turn it over. What's it? Credit risk is the risk of what?
That the borrower will be unable to fulfill their.
They ain't gonna pay you back. Let me $100 or $1,000 and I can't come to you the next day or 3 weeks later say I had it. That's credit risk, right? Okay. So if you're willing to accept unsecured loans, you're taking on a high level of credit risk. But if that is acceptable to you, that's fine, right? However, right, you will have credit losses. Higher risk, higher credit losses, right? The question is that trade-off between that and taking on all the business development? So in simplistic terms, if you lend money to 100 people, right? Some of them are not going to be able to pay it back for any number of reasons. They die, they fall down, they lose their job, there's all kinds of things, correct? All right. So let's say that's only 3%. That's 3 out of 100. Okay. But because you have accepted a level of credit risk that's high, that 3% maybe turns to 7%. That's acceptable to you. Why? Because you want to lend money to 100 people. Okay. So there's a balance. When that 7% becomes 15%, you ain't happy, right? Okay. You got it? Everybody understand? There's a trade-off between business development and credit risk. Business development is sales. Going out there, banging the bushes, looking for people to borrow money from us, right? When does Commonwealth Bank do very well? They get out there and look for people who want to borrow money, consumer lending, okay? To do that, they have to be prepared to accept a slightly higher level of credit risk. Because I know my friend from Scotiabank, she don't go outside the bank. Once she get there in the morning, that bank air conditioned, she ain't going outside except to maybe tell someone to bring her some lunch. Other than that, am I right?
Correct.
She ain't going outside.
Now you're going in the bank now.
What happened?
I said,
Jeez, I want your job. Wow. Okay. So my point is, right, Scotiabank takes a different philosophy. She's not in loans, so she's not expected to go and look for loans, right? Yeah, but they take a different philosophy. They will not be as aggressive with business development, right? Because they want to keep their credit losses down. No matter how good a lender you are, you will make bad loans or loans will go bad, okay? And if your lenders, if you're running the bank or branch, and if your lenders have no credit, no losses from credit loans or bad loans, they ain't aggressive enough. Right? They sit in the bank enjoying the air conditioner. They ain't out there looking for business. They ain't pushing. Okay. Okay. Any questions about that? Hello? Yeah? No?
Okay.
All right. Stress testing. Okay. All right. Now we talked about this extensively when we were looking at what? Dominique?
I don't remember what section remember stress testing.
When did we talk about stress testing?
Last class.
Exactly.
Yeah,
Last class,
yeah, we talked about that with, the IMF.
Like when the bank, oh, I know, I can't remember. It was about the Basel III. It's when the
Yes.
bank, like,
Mhm.
I wouldn't say pretend, but like say it's an economic shift in the country, they'll try and see what would happen in the event that some change occurs.
Okay.
Like to see if the bank will still be able to perform well.
Yeah. Okay. So here's a stress test that you do when you're dealing with credit risk. Specifically, this happens in loans. To measure the bank's exposure to losses in disordered markets, we use stress testing. This is a disordered market in the Bahamas right now. For the past 3-4 years, before COVID, it was bad, but the COVID made it even worse, right? Okay, so this technique relies on computer modeling of different scenarios, right? And their effect on a bank's loan and security portfolio, okay? An example, what if the Bahamian dollar devalued by 25% against the US? How would that affect the credit, right, risk of the bank? We are talking about techniques of credit risk management, correct? So if I do a model that I could run this scenario on the computer with, I would have an idea what that devaluation would affect me. And so I can prepare for just in case, or have a set of guidelines if it were to happen. Make sense? All right. So this happens in the Bahamas, not necessarily this, right? But we do stress testing in the Bahamas of the loan book. Okay. Yeah. Usually it's just with interest rate changes. Okay. Yeah. So all assets in the bank's portfolio would have to be revalued. This is if we had a 25% devaluation. Okay. Just walking you through in a little more detail with slides so you all could take pictures of it, right? Of a stress test. All assets in the bank's portfolio would have to be revalued. What are assets in the bank's portfolio?
T-bills, BG, no?
We're a bank.
No.
Loans on a bank's balance sheet, loans are assets, right? Deposits are liabilities.
Oh, yes, okay.
Right? Deposits are owed to the customer. Loans, people owe you the money.
Okay,
So
yeah.
it's an asset. You own it, right? All assets, including the T-bills, right? But we're talking primarily about credit risk, right?
Mhm.
So all assets, all the loans in the bank's portfolio would have to be revalued. That's what you would do if you had a 25% drop, okay? Because that devaluation is going to impact somebody's ability to repay. You've lost 25% purchasing power. Do you pay the bank, or do you pay for gas, or do you pay your electricity, or do you buy food? Do you pay your your children's school fees, or do you pay the bank? Okay,
Pay your gas and get the food and the electricity bill.
that's what you're gonna do.
That's
You ain't
what the
gonna make-
people is doing.
That's what they just do is right, and the bank to say, no, pay me first. If not, I can send Ms. Cartwright enough friends to come get my money.
So this is something, remember when you asked, like the first in face-to-face class, which bill you pay first, and I say the highest interest. So I was telling one of my friends, well, so the same scenario just now, they said, hell no, because at the end of the day, down going, gonna put food on my table, or I'll pay my light bill. So that's anyway.
Okay.
I will tell you what.
Right, now, is your friend good at managing his money?
We don't have any money issues.
He doesn't? No. Not issues. Do you consider him the man, do you
I don't
consider?
know, I'm not about to know.
But then he ain't know what you're talking about. Okay? See, is a difference between when you have $100, when you have a family of 4, you got 2 children and a husband, or you got 3 children, however you want to cut that up, okay? What is your priority?
Your children.
Okay, so you're going to deal around that, okay? Now, if you are making, $6,000 a month, okay? That sounds like, hey, you ain't got no financial worries. But you know how easy it is to spend that? Okay, it don't sound like much, but it's real easy to spend that. Especially if you spending $3,000 a month in rent. Okay, and the car you driving is a $900 or $1,500 a month loan payment. Okay, and if you shopping in Fresh Mart, right, or down in the Life and Key place, let's that one down Life and Key. Sorry,
Very expensive. You're
very
looking on
expensive.
me.
Right, yeah, it is very expensive. Right, you understand what I'm saying? So even though you have the money coming in and it looks like you shouldn't have any problems, that's deceptive because you don't handle the money well. Okay, right? And if you ever want to see people handle money well, look at Bahamian women, right? When things are tough over the past 50, 60 years, look at your parents or your grandparents and see how they handle their money. And you wonder how they get 6 children, right? Husband and wife, 6 children living in one house and everybody eating.
When I guess so, the grocery prices was almost they would smile back then.
Yeah, but the money you didn't have the money.
The same thing we making now, they always making back then.
No, it's making less.
Much less,
Mhm.
much less,
I don't know how they do it.
much less. Okay? Yeah? My aunt, my father's brothers and his wife had 8 children. And they lived in a 2-bedroom, 1-bathroom house. And then they built a bigger house.
How much did them kids went to school?
Like the high school, all
To college.
2. That's it. Right out of high school, going to work. One of them worked for Scotia Bank, one was a legal secretary, one worked for the government. That was the first. And one worked over on Paradise Island. That was the first 4. Then the twins went to college. And the next one went to work at Commonwealth Bank. And the other one, All right. So the point here is the assets are going to be revalued, right? Then you have to calculate a new estimate of the return on the portfolio. Okay. Now remember, being in this to do nothing except make money. Okay. So if I lend out all of these loans, right, I need to know how much I can make. Okay. If I have a devaluation and I have to revalue my assets, my return is going to change. Okay. Return, not interest rate, the return. Okay. Right. And then how is that going to impact my profits? And most importantly, Dominic, what? What's the most important thing on the bank's balance sheet? What? Absolutely. Absolutely. So that is why a stress test is done for credit. You hardly ever do stress tests for operational risk. Okay? You do stress tests for credit. Okay? And credit risk management usually does that about every 2 or 3 years. I think it's every 3 years. Okay. Operational risk. Let me hurry and get to the end so y'all can go home early today.
I seriously will go home early, Mr. Fontaine.
All they have to do is put that thought in your head, say it, speak it.
Yeah, say it long.
You did not go into work. You were working from home, you said.
Mr. Fontaine, I speak up on my computer 11 o'clock in the night.
Why?
Working from home is not healthy.
Okay, but why are you on your computer at 11 o'clock at night?
Because the work ain't done. See, when you go in the office, you just go 5 o'clock, you go home and mind your own business. When you have done computers home, like it is haunch you.
So you mean like how you always do me when I have them online classes. Like when I have them online sessions and I have to be prepared and I got all my notes there. And then when you all finish, I have to go do all this stuff. And then 10 o'clock at night, I said, did I cover this? Did I cover that? Do you think they understood that? No.
Yes. No, yes, that's just what it is. It's stressful.
You could take it. Just remember your parents. Operational risk. The risks, these risks are the most difficult to quantify and hence model. Very, very difficult, right? Because it comes, a lot of it comes down to the character of your employees, okay? The character of your employees. Remember that risk management uses computer modeling techniques. Internal controls and audit is by experience the best defense. So all of y'all, when the auditor come around, right, and giving you a hard time, you sitting there saying, I don't know.
Well, you can never say you don't know.
What? Then what you gonna say? Right? You work in compliance, right, Ms. Whitfield?
No.
Oh, okay. Which area of the bank you work in?
I guess in the legal department.
In the legal department, okay. So, y'all don't get audited, right?
The bank or the department?
The department.
We get audited, but I don't really have to deal with too much financial, and this is mostly like with the department working on that type of stuff.
Okay. I saw it from Ms. Cartwright,
Why?
because you just get audited. It ain't every year you always get audited. Every year. If you dealing with cash or treasury, you get an audit.
You get audit. Anything you get an audit.
That's true, but you know you can get audited through treasury, right? And in treasury, but that is the good thing about treasury, because you know you can get audited, and because it's cash. This right here. You want to see a stickler, you take somebody who is a senior treasury officer, right? And put them in charge of operations. This, they will kill you. Why? Because they see the benefit of it. If you're doing it right, if you're doing the internal, if you're following the internal controls, I could find the difference. Am I right? Etheria, is that right?
Yes.
Right? If you do not follow the internal controls, I can't find the difference. So the first thing I think is you did it on purpose and you're teething. Right? Okay. That's the first thing. Second, with internal controls, any pattern is not a coincidence. Right? If the cashier constantly off by $1, $5, $3, and so forth, something wrong. Yes or no?
Yeah.
See, the good thing is a good manager, you know. Is when the treasury officer comes and say, Mr. Fountain, I was in Freeport, Mr. Fountain, we got this cashier gotta go. He's coming in, Mr. Fountain, I pulling out my hair. I can't find these differences all the time. Right? So then we turn around and put someone else to go and check. And all it is just slackness, laziness. Won't do this, won't do that. Right? You got a hard raise from the bank. Because your problem could become my problem. Right? And when the internal auditors come in there and see that you ain't doing nothing about it, right? Angelique, they blaming you.
We gotta do something about it before we come in.
Absolutely. So internal controls is audited by experience is the best defense. Don't ever forget it, especially in your own personal finances. This is the key, right? This is the key. You don't, it ain't about trust, it's about doing it the right way. However, these risks are also part and parcel of banking. There will be people who will find a way to beat you. Yeah. And let me give you a little story. I was working for Barclays Bank. Barclays Bank had branches in Africa, in Botswana, right? It's down by Southern Africa, Cameroon, the capital. So they used to have to go out in the Land Rover, right? To these sort of remote, not remote villages, but villages where they had like that, not diamond mines. They had like big cattle farms and so forth, right? And they'd arrange for like once a month to go out there and make a payday, okay? So the auditors come out there with them and say, You need to chain the box with the money to the Land Rover. Okay? And people say, well, okay, if that's what you want. So the auditor asks them, well, why you don't want to do that? You say, the Land Rover more valuable out here than the cash. All they can use the cash for is light cigarette, right? So we can lose the Land Rover and the cash because they ain't teaching the cash, they can teach the Land Rover and take the cash with them. What was that? What happened, Angelique?
Nothing.
You ain't like my story?
No, I like the story.
No, I say nothing more to y'all. Interest rate risk.
We was listening.
This risk at the very heart of banking, and therefore banks are constantly exposed to it. First step, identify those assets that are rate sensitive in the short and long term. Right? A common tool to measure this risk is called gap analysis. The difference between your deposits, right, and your loans, the difference between your interest rate for one period and the next period. Okay. However, it only focuses on the effect of income. Stress tests can be used on interest rates. Again, we're talking about mitigating risk, right? We were talking about techniques to mitigate credit risk, correct? Then we talked about using a stress test to mitigate what? Credit risk. Then we talked about operational risk, and the best way to mitigate that is internal controls and audit, right? Interest rate risk, another risk. One of the best ways to do that is use the gap analysis. Okay. Okay. Now let me explain to you all. If you put your money into a fixed term deposit for 1 month, okay, right? At the end of 1 month, you could roll it over, okay, or take it out. If you take it out, right, what does the bank do? They got to fill that gap. Okay. What if everybody put their money into 1 month and nobody is out for 2 months, 3 months, 6 months, or 9 months? Yeah. How do you get them to spread it out so that you cut the risk down, right? That if interest rates go down, they can yuck all their money up. Or if someone else increase their interest rate, the money flows up. Okay. So you have to have these analysis. Okay. The gap analysis is one way to check that. Okay. That is for the interest rate gap. And then also to see if you are going to have any exposure, right? And what that exposure is going to be. And the last and most important one, this is especially for my friend Dominic in credit cards. What is, yes?
Sorry, can you go back to the last slide for 1 second, please?
Stress tests can be used on interest rates. That's the last line here. Can you see that?
Okay, got it.
Okay. Don't worry, y'all were so quick, y'all didn't take that photograph. So, Dominic, right? Limits to risk management, okay? Stress testing can be used on interest rates, right? Over-reliance on computer models, which can be based on faulty or unreasonable assumptions, will have a really big impact on your risk management. Understand that, right? Garbage in, garbage out, right? If you rely on your computer systems, right? Okay, fine. But if it's based on faulty or unreasonable assumptions, your models are going to be off. Okay. And if you ever work in cash, you ever worked in cash? You don't know what you're missing? You should join, Angelique can come work in cash. Go join Liquidity. Liquidity, Dominic wants to come work in cash with you.
Why?
See, she ain't say why. Why? She say no, she ain't coming over there. Sorry, Liquidity, bad information. Okay. Cash is one of the best places to work at the beginning of your career in a bank. Right? Because you learn more about how a bank's operations work and at any other time. Okay? You understand dual control, you understand the risk, you understand procedures, you understand all of that kind of stuff. And if you're on cash for about 2 years, right? 2 solid years, believe me, When you get off, you ain't gonna forget none of that stuff. Don't matter what you do, you ain't gonna forget that. Okay. Old-fashioned prudence and common sense is invaluable, right? No matter how much you have this, okay, you still need Angelique and Letheria as the supervisors for cash, checking that cash, no matter what your computer systems do, okay? You still need in your area, okay, somebody that is looking at those applications and saying, just have a feel for it. And in our area, it's even more so because an experienced lawyer in your legal department is going to find things that this stuff is not going to pick up. Okay. All right. So that's risk management. That's the last slide. Okay. It is only 22. Let me see. Yes.
This point here that says over reliance on computer models, which can be based on faulty or unreasonable assumptions. What does that mean?
Okay.
I assume
Go ahead.
you would put in whichever rates or however you want to manipulate it, right?
Okay, but if you put faulty information in or garbage in, then you'll get garbage out, no matter how good the system is. Okay.
Okay.
Right. You still have to interpret the information that's coming out. Okay. If you take it as gospel. Okay. The easiest way for me to explain, to maybe give you an example is you all use in Commonwealth Bank. I don't know what the system is called, but for your cashiers, right? Every transaction is posted immediately, correct? Yeah. So you can see during the day whether the cashier is balancing or off balance or whatever it is. Am I right? Yeah? No?
Okay.
Yeah. Okay. All right. All the banks, they all have very, very similar systems like that. There used to be a time when you balanced at the end of the day and that was it. Okay. Now, as you post those entries in real time, right, you can see whether or not you're balanced after every transaction. Okay. Does that make the cashier better? Right? As opposed to somebody who could do it all manually and keep it on a piece of paper?
Yeah.
Which one is easy? Which one is better?
Your system.
The system, why?
Because the system does not work for you. You don't have to literally.
The system is doing all the work for you, but which one makes a better cashier?
Oh, the manual.
The manual, because you're not relying on the system to do everything for you. Okay? The reason.
I think manual is better.
Right, but the
I feel
reason.
like the systems is crippled, the tellers, and
You got it.
they doing.
That is exactly right. And all cashiers used to tell me that all the time. Mr. Fountain, ain't nothing wrong with these systems, but these people are not good cashiers. Because the minute they cannot use the system, they are lost. Now, nowadays we got generators and all the rest of that. But I've had, after a hurricane, trying to balance cash, and we got no power in Freeport.
They don't know how to count it down.
And they don't know how to count either, Letheria. That's from Angela.
When I was in Long Island and we had Hurricane Rocky in, we had to open the bank without any computer systems for 4 days. And we had to kind of call and find out customers' balances, and we literally was just balancing manually.
That's right.
They can't even balance with the computer system. They cash still zero.
Exactly. Okay. Now, I'm just using this as an example. Okay. That is a computer system and it works really well, especially for cash. But if you put garbage in, you can get garbage out. If you over rely on that, right, the quality of the staff suffers in that particular thing. We know that. Now take that same idea and say, we're going to model all of these things for our stress testing and for our credit risk analysis and for our interest rate analysis, analysis, for our operational risk and so forth. All of a sudden, the person's nose to find where things are different goes out of joint because everything comes back, right, to what's in the computer system. Okay, that's all I'm trying to say there. Letheria, you see what I'm saying? Yeah.
Sorry, I messed up part, Mr.
So
Franklin.
I'm just trying to explain why I have this in here, faulty or unreasonable assumption. Garbage in, garbage out, right? And if you have an over-reliance on the technology, okay, you will have problems. Now, that don't happen in other countries because the power don't go out, they don't have electricity shortages and stuff like that. But just imagine if the ATM system go down in Miami, just in the city of, no, and Pembroke Pines, where all our shopping is going. Just imagine the ATM systems. Now you try and get the banks to say they don't know how it's that. You know what a nightmare that is? Okay, that is a nightmare, right? You cannot even begin to imagine that. Because you know how many things go through an ATM now? Okay, and the person come in and say, this balance wrong. And you can't prove it. All right. Okay.
Mr. Malcolm, what's the also to do with, I guess, operational risk? Well, the one which you said, you make sure the guidelines, the bank code, like the staff is guided properly. I think it was under Basel something.
What? Sorry, you lost me. So,
Last week,
yeah, okay.
last class, you mentioned something where the bank is to ensure that they have like a proper policies, guidelines for the staff to follow. I thought that came under one of the Basels, but I'm not sure.
No, that doesn't come under the balance and so forth. That you could include that under Basel II, where they look at operational risk. And so therefore, the banks would have to be to have their policies and guidelines and so forth looked at. But what that is, what you're referring to is the fact that management is responsible, right, for creating, right, the policies, the guidelines, the procedures, the processes, and so forth, and enforcing them, right, in managing the bank. So we were talking in that instance about bank failures and how 90% of it rested at the feet of management. Okay, yeah, that's what that was referring to. But in operational risk, you could throw it in there, but that's not got the same sort of intent. Okay. Okay, so we have one more lecture, which is going to be on Tuesday. So just give me 1 minute here. Okay, so I know some people aren't here, so y'all are going to need to let them know. Let's get some things out of the way. We are, next week is our last week of classes, right? Okay. All right, tonight is our last test. That's test number 6. You've already done your midterms, right? So we're done. Tuesday online is going to be the last full lecture. Yeah, we're not going to have a lecture on Thursday. Thursday next week, I will be here and it will be revision. Anything you want to talk about, we can go over. Okay. A week from Thursday, on the 17th, is your final exam. Everybody got it? Sure?
A week from Thursday.
Today is the 3rd. Our next lecture is on the 8th. That's online, right? We will have a full lecture. That's it. Okay, it'll be a full lecture. Yeah?
Mhm.
Okay. Thursday, the 10th, right? We'll be here. There is no test. Okay? And it is all revision. If you choose to come, no problem. If you choose not to come, no problem. If you choose to come and leave early, no problem. But I am not going to stay here, right, until 8:30 if there's nobody here. So if nobody shows up, okay, our class starts at 6. I usually get here about 5:30, right? If nobody's here by 6:15, 6:30, I'm gone. Okay? It is up to you to tell me what you want to talk about. I'm not going over a revision of all the class lectures and so forth. You tell me, Ms. Fountain, I don't quite follow Basel one. I don't understand. I don't quite appreciate foreign exchange. How do you mitigate credit risk? Yeah.
You can also tell us so we can, study more and that.
Yeah, every day.
Mhm.
Okay. Now, the final exam, right? It will be similar to other final exams that you've had from me. You'll probably get 8, maybe 9 questions, and you have to do 5. You have to choose 5 out of them. They're always all going to be written. Ain't no multiple choice in them. You may have 1 or 2 questions that have 3 or 4 separate short answers, components like that, and some will be 1 or 2 lines where you got to write whatever. The exam is 40%.
How many
Okay.
midterm is?
I know, 25.
And the test is.
Rest. I changed it because everybody was complaining and I was giving them too much work in 7 weeks. Okay,
40 is a lot.
it's 40. You want me to change it?
No.
You want another test?
Mm-mm.
You want to do a project?
Mm-mm.
Stick with the 40. Say hello to your son, Ethereum.
Okay.
Okay?
Fountain, so you said the final is 40%?
Yep. If I remember correctly, but all of that was in the notes that I gave out at the beginning of the class. When I
My
say
notes say 35%.
35 then. Whatever it says in there is 35.
The final is 35.
Okay.
Whatever
And
I
I say
said,
the test is 40.
the test is 40, right? Right, that's right. The test is 40, the
Midterm.
midterm is 25, and the final is 35. Okay, but just look at what the handout that I sent you all electronically. That has all the things and so forth, right? Okay, and we drop your worst test out of the 6. If you did all 6 tests, whichever one you got the worst, that gets dropped out, and I only counted best top 5. If you missed the test and you got 0 on the test, that's the one they'll drop. Okay, everybody good?
Mhm.
Any questions? All right, you can still talk to me on Tuesday, right? On Thursday, but Thursday I'm going to be here. I'm not going to be online. Yeah. Okay. So eyes are on y'all. Let's get going. We got a test to go do.
Yep, that's kind of.
Let's get it over with. Boom, 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 boom.
I don't know what that's on.
It's on whatever it's on.
This week. I only need one tonight.
You want me to do more? I think that would be okay by me. All right, it's 10 to 8. Does that say test? That's the one.
But this is very distant.
Oh, mine, right.
No, that ain't right. Don't try that. Don't
Mine,
worry.
right.
Yeah, yours is checked. Let me see.
This is how you pass this without them?
Six. All right, let me get this thing to them. Okay, let me send you, I'm gonna send this email to you in a couple of minutes. Okay, Letheria, I've sent it to you. You should see it in a couple of minutes, okay? Just let me know when
Okay,
you
what
get
time
it.
to return in, Mr. Duncan?
I'm sorry?
hour?
Yeah, it's half hour.
Okay.
Okay.
I got it.
Okay, thank you. Letheria. Yes, please. Which question is that? Is that the question or is that just the part?